Welcome to an introductory class about money, finance, the ways of business, and financial crime, the way people abuse those things in order to profit. I'm Rio Miner, your host. Today, we'll be discussing at a high conceptual level things like what is money? What is finance? How does the Federal Reserve System that we've all enjoyed in that famous musical, how does it actually work? Money, it moves a lot of different ways, like a river, like a stream of electrons, and we're going to discuss that. We'll also discuss how U.S. businesses are organized, and then how all of these things can be abused in the form of financial crime. I'll introduce you to the anti financial crime workflow that takes place in many institutions across the world, and we'll talk a little bit about the way public private partnerships work, at least in the United States. We're going to do this in 3 different videos today. So if you enjoy what you see, stick with me all the way to the end. All right. So you may be thinking, Rio, I know what money is. Been using it all my life. Don't have enough of it. It's some sort of current coin or metal, sometimes stamped in pieces that are, portable. And it's something we use to exchange value. And I would say, yeah, that's right. It's also applied occasionally to objects that we used to serve the same purpose as coin, because by now coins are not worth what they used to be worth. So we use things like dollar bills and whatnot. But allow me to broaden your mind. Really, what we're talking about is exchanges of trust and exchanges of value. The first way that we're thinking of this is called metallism, and it really comes from the idea that a lump of gold or a stamped piece of metal, which is rare and difficult to get out of the ground and refine, well, that has inherent value. You might be right. This is gold, silver, and cigarettes. I'm sure we don't think of those as often today as we used to, but the fact is in certain environments, having one of those is worth gold. Well, a long time ago, Europeans discovered people in South America that were using cacao beans as a medium of exchange. These are beans you could grind up and make into a dark, frothy drink. Today it's used to make chocolate. And these were valuable, and they had inherent value because you could eat them and enjoy them and do things. Cows are similar to that. But today we don't really use a lot of these things. I mean, even if you think gold is valuable, you're not usually carrying around gold coins and shaving off a little bit of the edge to pay for your drinks in the bar, or whatever it is you choose to do with your recreational time. Instead, we all use a form of chartalism, whether we like it or not, and this is a token that represents value and the trust that you will give me something in return for my token of value. In the ancient days, we might have used copper coins. In fact, I think we just recently eliminated our smallest copper coin. And a lot of us are using banknotes, i.e. dollar bills, okay? We all know what those are. We carry them. We used to use them. But in ancient times, they also used to use something known as a cowrie shell. This is a small mollusk shell represented by that graphic there, and it's really just something that people would collect and use to represent the value. Maybe not a lot of value, but certainly some. There's another thing in old Pacific Island cultures known as the rye stone. This is a large, more than 1 ton carved, beautiful piece of rock that was used to represent rather a lot of value. And if someone were to exchange such a rock, it was impractical to move it. So what you would do is simply change ownership. And even though the rock was next to someone else's house, it would then represent your wealth instead of his or hers. And today we have similar things in the form of digital currency. You might think I'm making a leap there, but am I really? It's really a way to use a system of trust, a system of shared trust in mathematics, in encryption and coding, and in the digital movement of funds, which we're already doing through intermediaries, such as banks and payment processors. But really what we've done is we've taken a chartle, a token of value, and figured out a way to exchange it securely and make sure that we trust each other. So this is similar to what the Federal Reserve does. You might think that the government prints randomly money. It's not random, but they do print money, and they do make it out of nowhere. The Federal Reserve System relies on a central bank. This is the way many nations operate, and I'm specifically talking about the one that was developed by Alexander Hamilton for the United States. We then have reserve banks, which are actually part of the Fed. and member banks. And the member banks, the reserve banks are really just the branches of the central bank, okay? And they exist regionally across the country. I'm not going to get into this too deeply. I am not an expert in all these things. What I want to do is impress upon your mind how these things work at a very high level and then at a more detailed level, so that when you go about investigating financial crime, you are now well attuned to what it is we're even dealing with. So the member banks essentially purchase stock in the Fed. Okay, they sort of own it. And that's why it's not exactly government and not exactly private. It's both. They own parts of the Fed. They own shares of the Fed. And then through that system, they lend money to commercial banks, which are open to the public. Those are the banks that you and I know about and the ones that we use, okay? Now, this money used to be created based on bills or pieces of paper that represented a certain amount of silver, that metal. That was the metalist concept. And then later they moved to the gold standard, and in 1933 it was removed as the domestic standard, but it remained that international transactions in US dollars were still backed by an amount of gold. It wasn't until 1971 that the Nixon administration removed this standard for international transactions, and eventually then we became part of what is known as the fiat system. While for many of you this may represent a small Italian car, the word actually means declaration. This is a currency by declaration, i.e., they just make it money because they say it's money. And what is money actually good for? It's actually good for the payment of taxes. People say the full faith and confidence of the government. Well, not really. It's really just that the government says you can use this type of piece of paper to pay your taxes. So the thing I like to remind people is that at the end of the day, most of this industry has to do with the payment of taxes and whether or not that money is going to where it should be going, or whether it has been siphoned off by people who refuse to obey the law. Digital, virtual, and cryptocurrency are other ways that this now has begun to happen. And I'm not going to delve into it, but I want you to just impress upon you that currency attached to whichever of those words is still currency. We're still talking about a form of money. So whether you call it a Bitcoin or a ruble or a yen or a euro or a dollar or a dollar or a dollar or a peso, it's currency. We're talking about a token of value that we then move around, okay? Since we're all on the fiat system for the most part, we can invent this stuff or we can remove it. The Federal Reserve is designed to control, as you see in the graphic, the flow of this thing called currency. Think about it a bit like water. Water has molecules. Molecules are individual dollar bills or pennies or whatever it is you want to think of them as. And the money is created by the Fed by making it easier to borrow, i.e. raising or lowering the base rate or the prime rate of interest. There are other ways in which the Fed does this, and if you want a more complex version of this, go to a business class. This is a financial crime class, so we are going to move on and talk about finance. If you're a finance head, you might realize already that this is investing, i.e., helping companies meet their goals by giving them money that they will then return to you in the form of divided profits and stock value. Borrowing money, lending money, so both sides of that transaction. I'm going to let you use some of my money at a price so that you can go and engage in capital transactions that help you do business. Budgeting is the process of then managing that money and figuring out where you're going to put it and where it's going. Saving it, of course, stocking it away, stacking it. And forecasting, how much do I need in the future? What does my future budget look like? There are 4 major areas or types of institutions that are using this, okay? Banks, other institutions, public accounting, and corporate. So these are all institutional finance is sort of different than banking finance. Public accounting, very different. Think about sovereign wealth funds, think about municipal bonds, etc. Corporations operate different than a bank is a corporation, but it's a corporation which is dealing in money. So it has a whole different set of rules. Other types of financial institutions are included in that. You can think about all types of charities. You can think about foundations and endowments and schools and blah, blah, blah. But let's focus in on financial institutions for a moment, because it may not be immediately apparent to you that all of these things that you see on the list are actually financial institutions. Now, of course, this is a legal definition, so you can find these things somewhere in the US Code, but once again, if you want to know more about that, take a law class. I'm not a lawyer, I'm an investigator. Darn it. Casinos are moving money at a very high rate. Depository institutions are what we know as banks, but there are other forms, right? Like credit unions and things like that, where people can hold and pool and safeguard and lend out and provide interest and things like that on currency and funds, exchange funds. Money services businesses are primarily involved in exchanging and or transmitting funds. So they're not really into holding funds like a depository institution. They don't have a deposit relationship, but they are serving the needs of people to move money around. So moving it from country to country via like wire services or transmittal services. RIA, Western Union, American Express started out as this, etc. Moving money from one place to another, changing it in form. In fact, money services businesses does include currency exchangers, okay? And that's one of the way, by the way, that if you look at the bottom of the list real quick, emerging technologies, i.e. fintech, are essentially fancy rewrapped money service businesses. Don't forget that. They fall under many of the same rules, although cryptocurrency is now starting to get its own rule, and virtual currency is starting to get its own rules and better supervision by definition, which is a good thing. Mortgage companies and brokers are also moving large amounts of money and then exchanging it for real property. This is a huge deal. This is a huge way to launder money, and especially that final phase of integrating it often happens in real estate and other real property like this. And then precious metal. Hopefully by now you've thought of the fact that diamonds and gold coins do fall under that metalist philosophy, which does still exist. So you can move value through these items as well, and they're often maybe better than using cash, currency, physical funds. Securities and futures, again, another way to move value. Futures are commodities, like what is the price of this item going to be in the future. Sometimes those items are perishable, etc. We think about pork bellies and timber and oil when we think of commodities, futures. And then securities are bonds as well as stocks as well as bonds. This is the exchanging of debt and investment for capital at an expected rate of return, or an expected return due to the efforts of people. That's the Howey test, if you've ever heard of it. And then the insurance industry, again, moving large amounts of money, promising large payouts for small investments over time. And emergent technologies, as I mentioned, are allowing people to move money in new and creative ways across borders through the ether, as it were. That's a little joke. Because, really things are now disconnected from borders and physical items through the magic of the interweb thingy. So, we are going to now take a break. Stay tuned next for episode 2, Money and its Movement Methods.